Good morning, ladies and gentlemen. Today is February 17th, 2021, and I'm back with another Wednesday live show. And lots to talk about today, and I thought we would take a look at the open trades as usual, see how those are doing. As you guys recall, when we were here last week doing the show, market was, let's see, it was this day right here. The market was selling off kind of big time in the morning, like in the first half hour. And interestingly enough, here we are a week later, and of course it was a holiday here, right? President's Day. But a week later, we get an actual gap down this morning, and pretty big sell-off from the pre-market, but basically we got the gap down and the market's kind of been rallying ever since. And retail sales came in hotter than expected, and what else was it? Inflation was a little bit more of a bigger number than was expected, and so there's lots of there's lots of cross currents in the market, right? And so the better the economy does, I guess the and interest rates have been going up a little bit, and so I guess the conventional wisdom is that if the economy does better, then there will be less stimulus, there will be less Fed accommodation, I suppose you could say. So that was sort of like the common theme around the open. And then of course, the market's gapped down, which we hadn't really seen in a while. I'm looking here to see. I don't even remember what this day was about, this particular Friday here, but you can see that this trend line is still rising, kind of extended above it, just like we were last week. And you get these little intraday sell-offs, and so far, none of them have really turned into anything, right? So, an actual market dip, I think that this may have been close to a dip back here towards the end of January, but I mean a market a dip a few percent would take you back towards this rising trend line, probably not even violate it, but so it is what it is. Market is kind of extended here, obviously. We're extended from what I would say is pretty much the primary trend line right now, because you can see all the touches on it, right? I mean, it goes all the way back to last November. You had a couple of touches on this trend line, and then each one of these little sort of pullbacks. Look at that. That day went from an all-time high to touching the trend line, and this one actually kind of broke below it. So that was the last, and that was what little 4 day sort of 4 day sell off. Like I said, I don't remember what that was about, but anyway, it wouldn't be a big surprise to eventually see the market pull back and touch this trend line. But the funny thing is that I sat here last week and early on watching the market sell off while I was before the show and while I was doing the show, and it seemed kind of dramatic, and then basically turned into nothing. In the big scheme of things, we haven't actually seen any sort of volatility to the downside since last fall, right? These couple little dips here, which was after like this huge run. So anyway, the Russell 2000 even looks more dramatic, and this is probably the thing to keep your eye on. I've always said for years now that I think that the Russell 2000 is, and there was a period of time where the Russell was kind of underperformed the rest of the indexes, right? Like back here, basically since the March lows, it kind of underperformed the obviously the Nasdaq, right? I mean, the Nasdaq just it broke after the sell-off. When it hit the March low, it broke that previous high, like basically in a straight line and rather quickly. Whereas the Russell meandered, and didn't break it until the fall. These previous highs. This green line was the previous Russell 2000 all-time high back in 2018, right? So anyway, but since then, since it broke out here, and since these highs, that the overall market, all of a sudden the Russell just kind of caught fire here, and so you can see that the trend line's a little bit more. Actually, the whole rally is a little bit more orderly, it seems like, and so it is what it is. Um, Eventually the Russell may pull back, touch this trend line. If it breaks this trend line, obviously, there's tons of support. So there's actually a ton of support like right here, right around these highs and the trend line. So if the market did pull back, over time, it would probably find a bunch of support right in this area over here. And obviously these previous lows are something to watch, and the highs from back here. So tons of support below. It would really take something to throw a monkey wrench into this current market environment, which can come out of the blue, right? It can be any number of things, and so it always catches you by surprise. It's kind of funny. I think yesterday I read that Bank of America came out and said that really the only reason that the only thing to be cautious of is that they can't think of any reason for the market to go down or something along those lines. Kind of funny, but anyway, so as much as sitting here last Wednesday, as much as that sell-off looked like it was going to do something, you can see that it basically turned into nothing. And then, of course, yesterday market opened at all-time highs. But yeah, it'd probably be healthy to see the market pull back a little bit and shake the tree a little bit. But hey, who knows? So anyway, the good news is that looking at our open trades here, seem to be doing pretty good, as far as there's quite a few in here. Some of these things have been open since around the beginning of the month, and yeah, this is Friday's options expiration day. Sometimes the market tends to be kind of strong going into options expiration. They sort of, in the past I've seen it rally and just sort of hold its own until after OPEX, but hey, you never know. So anyway, I thought we would take a look at these open trades here on the charts, and as usual, I'll start with the newest ones. We'll see how they're doing and work our way down. So let's see, MOH. MOH has been an open trade since 211, which is, so this day here, 211, closed above the trigger price, which was 212, and then the following day opened like right down there, and yeah, so far so good. You guys may recall that we had interestingly enough, it hasn't been that long since, I guess, towards the end of December here, there was a trade in this very same stock after this pullback, and it ended up doing pretty good. I mean, it just basically triggered in over here, and then there was this huge long range day that just blew through the target, ended up here, and eventually it came down. And the trailing stop on that last trade was like about halfway into this long range bar here, and of course, rolled back over, and that's where it got taken out. But anyway, it's kind of a similar setup here. There's a lot of similarities to it, but basically you got a pretty nice long duration, kind of a deep pullback, right? I mean, excuse me, it was up to $247 and pulled back to around 200 over the course of about a month and a half, I would say. And then here it is, popped, and looks like a pretty decent change in trend. So the initial stop, today's would only be like the third day here, and so the initial stop is still in place here until and unless it pulls away a little bit from the trigger price. not a bad looking setup at all. This is kind of an anomaly here, this big long range day up, but actually it's gone green here this morning, so it's kind of a positive sign. So moving down the list, we have Docusign, which which is looking pretty good, quite honestly. Um, let's see, Docusign triggered in over here on the 5th at the open, and we talked about this one last week. The trigger was down here at 240, and there was the close above the trigger on the 4th here was kind of significant. I mean, not, and like I always talk about, it seems significant at the time, but in the big scheme of things, you can see how, I mean, when they work, they tend to work out, and so you don't really want to necessarily sweat the small stuff. And it's a pretty big gap up. But anyway, lo and behold, you can see that there was the target, and there's the compensation target that compensated for the distance between the trigger price and the open the following morning. And as you can see yesterday, it basically plowed right through that. And so kind of hovering around here. The trailing stop as of the close last night is still kind of hanging back a little bit. So I would expect it to probably ratchet up a few bucks tonight after we run the update. So just sort of based on what it is. So um, the system is programmed in a certain way, and it wouldn't surprise me if it was looking at like yesterday's close rather than that high as far as and I don't know this for a fact, but it seems to me that if it closed up in like the upper end here, that trailing stop may have ratcheted up a little bit more last night, but we'll have to see. So anyway, so far so good, right? Triggered in, even though it triggered in on a gap, it's went well through the targets, and so now it's just a matter of whether the trend can persist. So back in the old days, I would see a price bar that looked like yesterday and think, oh man, well that's kind of the crescendo there and this little sell down. But hey, you never know. Nowadays, a lot of the patterns and the things that well, I see stocks all the time now that have a pattern like sort of like a little topping pattern for a day or two, and then they just continue on with their primary trend. So that's the sort of environment we've been in. At some point, the environment may change a little bit. Could start today, right? So there's usually like some sort of tipping point or something that kind of, it's like turning around a ship. Especially the trend that we've seen in this market. It's like turning around a big giant ship for this thing to start moving in the other direction. It's going to take some sort of catalyst, but the catalyst can be very subtle, obviously, in hindsight. So, you could look at we could turn around a week from now and the market will have sold off some, and I think there's a lot of complacency out there, and so it's almost a joke now, people talking about the market only goes up. So anyway, moving on here, this one's kind of interesting. For one thing, there was what we're seeing here is like nice pullback, but it's in the context of like this big giant gap up, and so I suppose you could say that this gap got filled, right? Because this low, matches up to this price bar, but not really. That's sort of an intraday thing, so there's still kind of a gap there. But anyway, we were obviously just trading this up cycle here, which had a little bit of, I mean, it had some nice juice to it, right? I mean, it rallied off of the lows and regained about three quarters of the sell-off, but didn't quite make it to the target, and as you can see now, looks like it's wanting to sell back down. So the good news is, and when I was marking this up last night, I was updating these stops. I was thinking to myself, and I knew this already, but it sort of dawned on me in a different way, and it's probably a little difficult to describe, but it dawned on me that the way that the system is designed is actually pretty amazing because the stocks that start trending and just keep going and keep going and keep going, we're going to stay with, right, and ride them basically for all they're worth. And some of them are going to not work out, obviously. And but the idea of the stop trailing up like this, basically you're going to see quite a few stocks that just end up, I don't say quite a few, but you're going to end up seeing some that just end up being a wash. And obviously that's much better than a full stop out. I mean, it's been kind of rare lately that we've had complete trend reversal failures where we get triggered in and the stock just tanks and hits the full stop. Most of the closed trades so far this year have been where the stock, made a move in our direction and then just, ran out of steam and faded back down and hit the trailing stop, which had ratcheted up. So anyway, over the series of a whole bunch of trades, what you're going to find is that the system's basically programmed consistent with the old Wall Street adage, let your winners run and cut your losers short, right? And so cutting the loser short based on like a stop that trailed up and gets you, and so we cut the ones that don't run short, maybe at break even, maybe down a couple of percent, a few percent or whatever, but the idea is that, if we can ride some of these things up to, significant double digit gains, and the ones that don't perform just get closed out, like, say this hits a stop today and gets closed out at break even, no big deal, right? So that's sort of the beauty of it. And the other thing is that instead of I mean a lot of swing traders, I suppose, would get in a position like this and like set an initial stop and just leave that stop there, right? I mean, and just sort of hope for the best. And so, I mean, you could be sitting on this thing for a long time. It could take a long time. A lot could happen between, now and when it either breaks this low or that high. But and of course, there's just a lot of randomness, right? So the target happened to be just a little tiny bit aggressive here. The high was 111.94. The target was 112, and you can see that it was rallying up, and then it had that reversal. So it'll be interesting to see what actually happens with Dollar Tree going forward. But right now, it had its rally, and now it's kind of fading back down, and you never know. I've seen this before where they come really close to the stop on a pullback like this, and then reverse course and the trend continues, but it's kind of looking a little rough here, so we'll have to see. But no big deal. Here's one. So for everyone that like Dollar Tree, worst case scenario is it hits a trailing stop for a minimum, minuscule loss or right around break even, basically. And then you get ones like this, which I wasn't extremely, um, what's the word? Well, I just ExxonMobil typically doesn't move that much, right? It doesn't have a lot of volatility, and so I thought, well, geez, but to my surprise, this thing has already made. I mean, it really has moved with the price of oil going up over $60 or whatever. This has made a pretty significant move, and so you can see that. Well, yeah, I mean, you can see it on the chart, right? The trailing stop started off down at the bottom of the pattern here, ticked up a little bit after, after a couple of days when it triggered in. You'll see that sometimes that the initial stop can ratchet up like literally the very next day. And that's pretty much what happened here, right? Once it triggered in and pulled away from the trigger price, then the trailing stop moved up, started moving up, and then it was based on these couple of days here, it ratcheted right up to well over the trigger price and the entry, and so far so good. I didn't draw the compensation target on here, but it would be up here and well above it. And so now basically, that's a pretty nice pattern. And so, like what I was saying before, the ones that actually it could have failed right here too, right? So like the one we looked at just a minute ago, it could have rallied up here, and then this was last Thursday. It had this red down day, and that could have been it. It could have just rolled right back over and pulled back, in which case, the system would have had us out. But that's really sort of that's sort of the beauty of the way everything's programmed is long as the trend continues, it's going to keep you in and basically sort of ride it for all it's worth. So as of yesterday's close, this thing was up 11%, and it's up another not quite 2% today. So much to my surprise, ExxonMobil is doing a lot better than I sort of thought it might do, because it's just one of those stocks that, like look here, you can see where, it spends a week and a half just kind of going sideways, or a week just kind of, trading, not really doing anything, but the overall trend is up. And this was a nice orderly pullback, and pivot low and change in trend. Basically, it was a resumption of the trend. So that's kind of what the system's looking for, right? A stock that's trending higher and then has some sort of a pullback, and then the trend resumes, and so we want to jump in on the resumption of the trend. So looking good on ExxonMobil. I talked about the dividend last week. That's a stock that the dividend is significant, so pretty good entry point, And quite frankly, I'm surprised, they're talking about the interest rates are so low, and they were talking on CNBC this morning about how, people are attracted to corporate bonds because they pay a little bit more. And you take something like ExxonMobil with that big dividend there, and quite frankly, it's surprising that more people aren't. Maybe they are. Maybe that's why it's going up. Besides the price of oil going up, obviously. So, all right. So, here's another one that this one triggered in kind of weird. It's we talked about the inverse head and shoulders or whatever, and I believe that last week when we were doing the show here, I'd drawn like I deleted it off of here, but I'm gonna put it back on. There was kind of like a big resistance zone that it needed to get through here, and I put that on the chart. I remember deleting it off, but anyway, yeah. So when we were sitting here, there it was last Wednesday. It was attempting to get through this resistance, and quite frankly, it did. Got through the resistance, didn't quite make it up to the target, and yesterday was one of those weird sort of gap up and fade days, and so it's good. It looks like it wants to retrench a little bit here, but here's something interesting to note is this move off the lows here. We had like this little pullback here where it was looking kind of rough at the time, right? It looked like it rallied up here and then reversed, and you had a couple of down days, and could have failed there, but it didn't. The trend resumed, and so we could be seeing the same thing here, right? Now I don't know how deep this pullback's going to go, and so it could go all the way down here and take out the trailing stop. But again, the trailing, if it does, the trailing stop has moved far enough up that it's just going to be, if it were to tag this thing like, today or tomorrow, it's just going to be a little tiny minor, minor loss as opposed to sticking with the ones that blast through the target and just keep going. So that's the idea there. So far, so good on this. It would have been kind of nice if it had one more push through the target, but the idea is that the system is programmed so that no matter what happens, we're kind of playing it the correct way because obviously nobody knows exactly what's going to happen. Like I said, you get these weak market sessions early in the day, and you see like a big red down bar while I'm doing the show, and then later in the day the thing rallies up, closes halfway in, and the next day it goes back up. So nothing surprises me anymore. Um, so let's see, moving on. Yeah, and I mean, quite frankly, there's oh well, here's one that tagged the trailing stop today. That trailing stop never did really ratchet up from here, which is kind of surprising to me, but the idea is that the trailing stop. Let me make sure that I got this right. Yeah, it was still down at 46. Huh? That's a little bit above the trigger price, a little bit obviously below the entry, but um, that was a pretty good V rally there. The biggest issue with this particular one, back over here, there was a really good trade. As I recall, this was one of the big winners towards the end of last year, but everything about this looked good except, like I always say, we have no control over how these things trigger in. And so, basically there was a long range day here and a gap up the following morning. So that's going to be one that gets closed. Fate just kind of hanging in here. Notice that the trailing stop is up to the trigger price here. Pretty decent rally, but ran into a bunch of resistance, kind of in the area that would be expected, right? So, it was a decent, quick pullback, a little bit different than I typically like the orderly pullbacks, but you do see a lot of sort of V bottoms in the market these days. So, sold off really quick, pivot low, turned around, ran into some resistance, trailing stops up to break even. So, no matter what happens from here, it's looking pretty good. And sometimes they do this. You got to rally back up to basically towards the top of this bar right here where the sell-off really sort of took hold, and so it's no huge surprise. And so on something like this, the way that the system is designed is to get that trailing stop up the break even, sort of or around break even or up as quickly as possible, so that if it doesn't, if the trade fails and reverses, the rally fails and reverses, then we get out around break even or for a small loss, as opposed to having a trailing stop all the way down here and sitting around for a long, long period of time while the thing waffles around. And so, if it came back down and hit the initial trailing or the initial stop, then that's typically a fairly significant. So occasionally you'll see one that triggers in and just fails and hits the initial stop. That's like the worst case scenario. And so that's actually kind of rare. It does happen, but so the way that the trailing stop ratchets up is designed to basically only keep us in the best stocks, right? So I mean that's just how it works. And so here you go. This is exactly how how it's designed to work here is. And so if this thing came up here and then failed, then it would have just been a small gain. But as you can see, square, very powerful pattern. Now here's an example of what I was talking about a minute ago, is this particular pattern here. Boy, if this is a pivot low, well then this is, as of today anyway, that's about as much of a pivot high as you can see. And so back in the day, you know, you could say, well, it's clearly a reversal pattern, pivot high up here, and which is being confirmed today. And so, you'd look at that and say, well, that's the top, and the funny thing is, though, that I see lots of these that look like, have big run-ups, topping patterns. They pull back for a couple days and then just keep going. Here's the earnings here, and that's something else I wanted to mention is for those of you that are new or haven't been around for a while, we always close any open trades ahead of earnings. And so Square happens to be releasing earnings on the 23rd after the bell. And so what we'll do is we will close it that day based on the opening price. So it's kind of we keep it consistent, and so basically we close any open trades using the opening price ahead of earnings. And if a company's coming out, if these guys were coming out with earnings, before the bell, then we'll close it the prior day based on the opening price. So, and we figure the opening price is the best thing to use because that anybody can get out basically, right at the open around the opening price. So it's better than hanging on and trying to get out at the closing price right ahead of the earnings release or whatever. So it basically gives you the luxury of selling anytime during the day ahead of earnings. Yeah, there's no reason to hold through earnings because we see all the craziness that happens when companies release earnings. You get huge moves down after hours or huge moves up after hours, and then there's just like there's no telling where the stock is going to open the following day. And so basically, it avoids any big surprises where you get like a 20% gap down or a significant gap down. There's no edge. There's really no edge in holding over earnings. I mean, obviously, unless it's a longer term investment, obviously you're going to hold over earnings. But for the purposes of what we're doing here with the short term swing trading, it just doesn't make any sense to hold over earnings. Something to note here on Square is notice this parabolic stop that I drew on here last week that was just under the low of this day, right? And never got tagged, right? And so when you see the parabolic stop, there's actually a few of them. ExxonMobil's got a parabolic stop, which I didn't mark, but I figured this would be a good one to talk about. When you see the parabolic stop, that's just something that you can use your discretion and say, well, okay, the stock has made a huge move, and it might just be a good spot to go ahead and lock it in and move on. And so that's basically what the parabolic stop's all about. And the reason I mention that is because 272. Let's see, yesterday's low was 272.32, and so that's close enough. And so anyway, you can see that there's a P stop at 272. You see that right over here in this column right here, P stop. So what's interesting about this, the most interesting thing about this is, whoops, I was trying to get this over here where we could see it. The most interesting thing about this is, I mean, typically when you start to see the P stop kick in, it's just a matter of time. I mean, a lot of times it gets hit the very next day or the day after that, but you can see that this parabolic stop never got tagged. It kept going up, and so if you were using that, then basically you'd be out today. And so the sort of the moral of the story is, but here's the thing, the trade's going to stay open in the system until it hits the trailing stop. That's just the way it's designed. But after this sort of run up here and that pivot high yesterday, it would not necessarily be, it wouldn't necessarily be a bad thing to say, okay, this does kind of look like a reversal pattern, and wouldn't be a bad place to lock it in, even right here. So, and we are going to close this on the 23rd ahead of earnings, along with several of the other open positions. So keep that in mind. Last but not least, one more left here, and that's Nike. Um, Nike's had a pretty good run here too. This one triggered in really sort of weird, and I don't know. It's just sort of the nature. It's just the nature of this kind of sell-off and the way that it dropped so much here, like this pivot low. And so it rebounded, the trigger was actually way down here. It gapped over the trigger, and so it was just kind of weird the way it all transpired. And so the trigger was way down here, but it didn't trigger in till up here, right? And which consequently was right at this trend line break, and it made a pretty decent move away from that, but now it's retrenching a little bit, and basically the good news about this is that trailing stop has ratcheted up considerably off of the low, and so we'll have to see what happens here with Nike. Nike has a weird earnings schedule, so it's not coming out with earnings anytime soon. There's a lot of support above where the trailing stop is right now. But then again, I mean, it did, sort of complete the pattern, and now there's a few different ways of looking at this, but it's just going to depend how this works out. I was looking back here and can see that we had a really, really good trade in Nike last summer, and it just continued up. That looks like an earnings pop right there. And so we'll just have to see how that plays out. But I mean, overall, things are looking pretty good. They all seem to be, sort of hanging in there. And you got a few of them: Docusign, ExxonMobil, Square, up double-digit percentages. And as we saw looking through all those charts, the rest of them, the trailing stop has moved up enough that even if they get knocked out, well, you saw the one got knocked out, so it's going to be, right around break even or a small loss. And so that's that's the whole idea of the way that we're trading these things is that we're sticking with the ones that perform. And then the other ones we're bailing out relatively quick, and theoretically, instead of letting them come all the way back down and and roll over, especially in this market. I mean, as strong as the market's been and persistent and just riding that trend line up, yeah, at some point there's going to be a sell-off. I mean, that's as long as I've been doing this and stocks traded in fractions, there's always a sell-off that comes along. And so this is an extremely surreal environment that we're in right now. People joking that stocks only go up and the market only goes up and this and that. I mean, there's bound to be a reality check at some point in the future, but hey, who knows? I come on here and I say that, but the great thing about the way that the system is programmed is that it's looking at the patterns on these individual stocks, and we've gone over that, and it doesn't really care about what the market might do or what it doesn't even think about what the market may or may not do. And so, as much as I can sit here and say, well, I think that this market's probably, this rally's days are numbered. Who knows? Every time that I turn cautious, the system, just does what it does. And so, anyway, that's basically why, it's all a automated software, because that's much better than a human sitting here thinking. Interestingly enough, and I'll leave you with this, is that it's not looking at like these kind of chart patterns. It's almost like every single swing trade we get into, I can draw like a trend line break or a pattern like this or whatever, and it fits. But the funny thing is that it's not any sort of a pattern recognition program. It's just the way that it's programmed: open, high, low, close, volume, ranges, all that kind of stuff, time. Um, it just so happens that it coincides with what we've come to know as legitimate technical patterns, and typically it's a trend line break, right? Because when a when a stock has a pullback like this, I mean that's obviously what the if you read the documentation, that's what the system's designed to do: find high quality stocks in near term uptrends that have reasonable pullbacks, and then the trend changes and reverses, right? So it's been working pretty well. So anyway, well, hey, thanks for tuning in. I will see you guys here, same time, same place next week.